So we got all-time highs on the NASDAQ, all-time high on Apple, all-time high on Peloton. Let's get to our Bob Pisani this morning. Hey, Bob.
Hello, Carl, and happy Tuesday, everybody. Kind of a flat open, although 2-to-1 declining to advancing stocks with the S&P, and that shows you the power of technology stocks. So if you look again today, tech's moving, but that's because you got Apple and Amazon on the upside. That helps. But look at the cyclicals, industrials, banks, energy to the downside here. Where are the new highs? We're at historic highs intraday yesterday. I see 6 new highs on the S&P today. And there's Apple, there's Amazon, there's Walmart, there's Qualcomm. Every single day, these 4 or 5 stocks are on there. And where's the rest of them? We need more new highs here to confirm the great movement and the overall uptrend in the market. Not getting that. As for Zoom video, you struggle to find the superlatives. Here's just a few facts I put together here. The IPO price that was in April 2019 was $36. It's $450 right now. The market cap when it went public was $10 billion. It's now $130 billion. The revenues when it went public was $430 million. That was the quarter before it went public in April 2019. It's now they're talking about $2.4 billion. So you struggle with superlatives to try to figure it out. This is a simple way to understand what they're doing right now. And there's Zoom today. That's not a typo here. You're talking up, what, 30%? And it was, what, $65 when it started in 2020. You see what it is right now. How about the market? How do you describe 5 straight up months? People are kind of at a loss for words because everyone's now trying to figure out what would break the market momentum. And a lot of professional traders really are at a loss for words. I spent a half an hour with Tony Dwyer yesterday at Canaccord, an old friend of mine for 20 years. He's withdrawing his S&P 500 target. He tells me there is no precedent to how high the valuations can go with low rates and unlimited QE. No precedent? I mean, these are veteran market analysts kind of like at a loss for words here. Brian Belsky, another old friend for decades here, reinstated, he had withdrawn his 2020 target. He's reinstated it. He says the market's epic rally is challenging traditional forecast models that are based on earnings and interest rates. John Stoltzfus at Oppenheimer withdrew his price target recently. These are veteran market analysts who know their stuff that are sort of at a loss for words on how to describe what exactly is going on. So this is the issue. What multiple do you put on unlimited Fed support? How do you describe it? That's what they're having trouble doing. You remember in the past, recessions were caused when the Fed essentially withdrew accommodation. What do you have now when the Fed has essentially said we are not withdrawing accommodation anytime in the distant future? What is the multiple? How do you assign it? You're not in any historical pattern or precedent, and that's essentially what these analysts are saying. We're in uncharted territory right now, and in the absence of that, you focus on the drivers. The drivers are unlimited, almost unlimited Fed liquidity, and the fact that the global economy slowly, very slowly, does appear to be improving. Those seem to be the 2 things that everyone is focusing on. Want a little bit more on that bull-bear debate? TraderTalk.cnbc.com has a whole discussion about that. Very, very interesting times to be in if you're a stock market analyst.